Good morning, everyone. Welcome to the Macro Snapshot. We are Wednesday, October the 15th, 2025. We're recording this in the morning. Okay, let's have a quick look and see what's going on. Basically, a little bit of cautious optimism creeping into the markets. Let's start over in Europe, where you see here with the French bonds a very sort of big move up in the OATs, which is the French 10-year, of course. And that's just basically because it seems as though the new Prime Minister, Le Cornu, basically, it seems as though he may survive a no confidence vote because the socialists yesterday essentially said that they would not be voting against the government. It's still not a perfect situation because a lot of the more right-wing parties may vote against that centrist coalition. But it does seem as though the government is a little more stable, or the political situation is a little more stable in France. And, apparently, he will survive the no confidence vote. And if that happens, there's a possibility that the budget gets passed and therefore everyone can sort of breathe out a little bit, and maybe we'll have some stability for a few weeks or months. So on the back of that sort of renewed optimism, what we're seeing here is that the French 10-year, you can see here really bursting quite a lot higher. And it looks as though it wants to go up to 124, bit of a level here at 123.17, but it looks as though that's going higher. And you can see that with the spreads, which is just here, France over Germany. And you can see that that's come in quite a lot. I mean, echoing the outright price. So you see the spread here, which had got up to about plus 86 basis points, now down to about 78. So all that to say that quite positive sentiment coming out of the French political situation, that's drifting all across Europe. So we're seeing the bonds up. In Europe, you see like the Bund also up. And part of this optimism could possibly be we had quite good earnings yesterday. Some of the luxury groups, especially LVMH, they're up about 14%, I believe, this morning, doing quite well. So quite positive results. Then if you look at the stocks over in Europe, well, not a huge amount going on there. That's interesting. More on the 50, the Euro Stoxx 50 up a little bit, but generally sort of relatively positive. And if you look then across at the currency. It's not only European strength in the currency, and again, strength is a strong word, but you do see that the euro up on the spot against the US dollar. And this is quite a key level here at about 115 and a half or so. And I just wonder whether that sort of consolidation there around the 100-day EMA, maybe the euro's got a little bit of upside movement there. Now, a lot of that, of course, is due to the US dollar. So let's look at the dollar index, which, as you can see, it's not collapsing or anything, but just having a little bit of a breather. And again, it's going to be interesting to see here whether this is quite a key level. We see it's the 100-day EMA 98.75, which also from this Fibonacci level here. So that could act as a little bit of support. So that's an interesting one there. Probably just a bit of sideways consolidation. And possibly yesterday, that's also because of Powell, because if we look at what Powell said at his sort of speech, fairly dovish in a certain sense. He did acknowledge that the labor market seems to be slowing down, that payroll seemed to be slower in a certain sense. What got my attention, I think the market's attention, that the balance sheet runoff is going to probably start to be reduced, he said, at some time soon, over the next month or two or three. So some kind of unwinding of a quantitative tightening QT. And that's a positive, more liquidity going into the system. Not a huge amount of money, but nonetheless, sort of the sentiment is a positive one. And he also, regarding inflation, said that, his take seemed to be that that's tolerable. It's still a little bit sticky. But what he was at pains to emphasize yesterday in his speech was that he believed any sort of tariffs, sort of induced inflation coming from the tariffs would be a one-time effect, and he didn't see any sort of underlying inflation in the general sort of scheme of things. So all in all, a relatively dovish sort of outlook for Powell, and I guess we're going to be getting our 25 basis point cuts at the end of this month. So if we look there, you can see the bonds here. Just have a quick look at the US bonds. You see here the front of the curve, the ZT doing quite well. You see the ZN. Now the 10-year doing quite well, and also the 30-year. So the bonds doing quite well, anticipating a little bit of nervousness about the China-US trade spat. And a dovish Powell, and that's enough for the bonds to go up, and also for the US dollar just to show a little bit of weakness. Now, in terms of the trade situation, let's just have a look at the VIX here. You see the VIX here is coming down a little bit, so everything coming down a little bit. We've got US equities up just a little bit today after, we had some pretty strong bank earnings. We have more bank earnings today, but we had Goldman Sachs, JP Morgan, Citibank yesterday. So all fairly strong overall, all, indicating quite not only good trading activity, but also slightly higher interest rates, which is a positive for banks, and also quite a lot of M&A activity, merger and acquisitions activity. So quite a lot of deal making going on. So we've got the ES up this morning. If we look at Nasdaq, just have a quick look at the Nasdaq as well. You see the Nasdaq up quite well, and if we look at the Dow Jones, which I was signaling yesterday, has quite a few of the big banks as components. That's also doing quite well. And in terms of the trade war, my personal view is that, without going into a lot of details, that there's a little bit of just sort of gamesmanship happening here. We saw yesterday that the Chinese were attacked by Trump for not buying soybeans, and it's true. I was looking at some numbers this morning that the number of soybeans being bought by the U.S. By China from the U.S. has diminished quite a lot, and that's been replaced by exports from Brazil. So it definitely does seem to be a shift from, in terms of China, trying to sort of trade more with its BRIC partners, and we're seeing that soybeans is a big export sort of a quantity for Brazil. And so Trump was sort of going on about that in public, and he sort of wagged his finger at the Chinese and basically said, well, hey, we don't have to import your cooking oil. So at this point, we're talking cooking oil and soybeans, and I think there's a bit of posturing. It does seem as though, quite possibly Trump and President Xi of China will meet over in Asia at the end of this month, the end of October. And maybe this whole soybeans thing, that's an easy victory. That's a low-hanging fruit for President Xi, and an easy victory for Trump, in the sense that, Xi could say, okay, we'll buy a few more soybeans, maybe not that many. They did that before, if you remember, in Trump Part 1. We'll buy a few more soybeans, and Trump can, call that a victory, and that the Chinese are taking the knee, as he likes to say. So we'll see what's going on there. But the markets have essentially said that, that situation is, complex and delicate, but not necessarily disastrous just at the moment. Now, in terms of the shutdown, the US government is still shut down. We're still not getting any sort of hard data, particularly, so the market is flying a little bit blind. What we do have today is the beige book, which is from all the different sort of district Federal Reserve districts, basically areas, and that's anecdotal evidence. So the Fed, really likes to look at that, and especially with the lack of sort of hard data, just that anecdotal evidence about employment, investment in all of those local Fed districts, that could get a little bit more market's attention. That's going to be released at 2 p.m. So let's keep an eye out for that. So apart from that, we have Australian data tonight. We have employment. Let's have a look, keep an eye on that. Just in terms of the Aussie, that's actually up a little bit today. You can see finding support along this 200-day EMAs. And that's just indicative of the general tone, because apart from domestic issues in Australia, the reality is that the Aussie dollar is considered a proxy for exposure for China and the tensions in the China-US trade negotiations. And so the Aussie up today. So a little bit of positive risk today. So we're seeing the Aussie up a little bit. If we look at New Zealand dollar, even that's squeaking in green. If we look at CAD, it's closer to the US, higher beta with the US, so not doing super well, but USD down a little bit versus CAD. And if we just finally look across at the US JPY, we can see that the Japanese yen gained a little bit. It's given that back a little bit. There's still quite a lot of political machinations happening over in Japan. And remember that Takaichi, even though she was elected president of the LDP, the Liberal Democratic Party, she's not yet the prime minister. And they're still trying to form a coalition. So until and unless Takaichi can form, sort of a strong government and actually become the prime minister, maybe that's the signal the Japanese yen is going to find it hard to rally too much more. Finally, let's just look at the precious metals. What can we say? Just continuing to rip higher and higher. We're now at 4,200 for gold. You see silver here. That's had a little bit of a sort of consolidation day yesterday, but sort of ripping higher, or $51.5. I think spots up to about 52.5. So the point is that the precious metals continue to go higher. There's probably elements here of a short squeeze. We know that there's a lack of shortage of physical silver at the London Metal Exchange, so that's putting up a bit of a short squeeze. But the macro fundamentals are still in place of in theory, less Fed independence, a deficit which is still being not reined in, et cetera, et cetera. So the question here is, can one short this? we're all tempted. Everyone's looking at this as extremely overextended from any sort of, sort of classical technical analysis. But it's just difficult in a short squeeze. The best way to play this is with options, of course. That way, you loss with the futures or spot. It is difficult because you could just be blown out of the water at any point here. But for sure, this does feel like the eighth or ninth innings, to use a baseball analogy. We seem to be late in the day. What is interesting is that copper had a bit of a down day yesterday. I mean, it's not disastrous; it's hanging in there, and we see, but as copper not nearly as strong, so still a little bit of wariness. Probably wants a bit more clarity from about the U.S. China trade situation. Okay, guys, I'm going to leave it at that. Looks like a fairly, I don't want to say a sleepy day. Let's concentrate on the beige book and, of course, any sort of updates in the China-US situation will be watched very keenly by the market, especially the equities and the dollar. Okay, we'll leave it there. Have a great day, and we'll keep this going tomorrow. Thank you.